Of course, the week in general. The Rob Luna Wealth Academy founder Rob Luna is with me. And Rob, we're going to get to that consumer inflation story in a second. But right now, I want to ask you about the volatility, because the volatility is something that has become the story of the week, more so than really we have seen in decades.
Yeah, I mean, that's the tough thing for investors, I think, right here, Cheryl, is when you take a look at the volatility, these whipsaws, 10% up, 10% down. You know, what I want to tell people, though, is this is kind of going to be the new norm, unfortunately. Be careful what you wish for. All these, momentum ETFs, 3x the S&P, 3x the QQQ. These are new tools that are in the market that weren't here during the 2008-2009 crisis. So I think you've got to be expecting these types of move in the market. But let's remember, the market is minute to minute. It's a discounting mechanism of what's going to happen in the future. This does not necessarily mean this is going to be the real economy. So what I'm really worried about is long-term investors getting thrown off of their game plan and making decisions that they're not going to be able to recover from.
Well, I want to pick up on that point, because I was going through the different components of the JP Morgan conference call this morning. A lot of questions about the consumer. JP Morgan is credit cards, as well as Wells Fargo. We had both those numbers reported this morning. And at JP Morgan, debit and credit card sales, that volume jumped 7% year over year. But also, they basically talked about the fact that average deposits were down. So that trend is continuing with these consumers. They are charging up more. There's more now predictions for defaults on loans, in particular with auto loans. And that is where you start to kind of get that recession talk that kind of comes back in as the story and the floor talk, if you will. Where are you at with that? Because honestly, the recession calls, many CEOs are starting to kind of say the quiet part out loud. We're in a recession already. It's here.
Yeah, I've been saying this, unfortunately, Cheryl. I think we already are in that recession, and they don't call recessions until you take a look in the rearview mirror. If you look at when Trump came into office, the economy was already in a little bit of trouble. We saw that, and I think that's why President Trump was trying to talk about these interest rates and the need for them to come down. And the big worry and what's caused some of these tariff talks to be expedited is that 10-year Treasury. We're not getting any reprieve. We're back to 4.5%. So all these credit cards at 23, 24%, the inability for commercial debt to refinance. There is a lot of real worries out there, Cheryl. I think that's what the market's trying to tell us. And what do you do when you don't have any clarity? You discount things. And that's what the market's trying to do. And they're trying to see, was that 48.71 level that we had the other day a big enough discount, 20, 22%? Or do we need to go further? And I think that's what the market's trying to reconcile.
Right. And one of your picks, your short-term picks, was Netflix, which, again, that's a consumer name. And then you also like Newmont Mining. Netflix is actually going to be out next week. So that's a couple of your picks. And then also, Tesla and Google, but you say later. Tesla's going to be suspending new orders. And this is just because of the order button on the website for China, for the Model S and the Model X. That's on the Chinese website. That's a long-term play. So go through the list here. Let's go back to Netflix. Talk about, do you think we're going to see price sensitivity with Netflix consumers?
Well, I mean, look, they're not going to be exposed to tariffs like we're seeing from some of these other companies, obviously. Netflix, if you take a look at the relative strength, it's been holding up really well in this environment. They've been able to perform. They've been able to pass on price increases to their consumers. So I think that stock is a safe haven, actually, right here, and it's actually held up pretty well. So that's one I'm comfortable owning right here. Same thing with Newmont Mining. Now, I gave that this morning. I didn't expect it to be up 10% today. But if you take a look at gold, if you take a look at the lack of confidence in the dollar, and you look at some of these countries that are increasing their reserves in gold, Newmont, I think, goes to $70, $75 a share. So those are two companies I actually feel like you can be invested in right here. And then I've got two that are going to be a little bit volatile, but I think later on down the line with Tesla and Google, you want to use some of these pullbacks to invest if you've got a 3 to 5 year time horizon in the other two names.
We got to run, but yes or no, is Tesla oversold right now?
I think it is a little bit, and they're not pricing in what we're going to see with robo-taxis that'll be rolling out in Austin. They're not pricing out Optimus with his humanoid robotics, which I think is going to be a big game changer in the next 2 to 3 years. There's just a lot of hate in the stock right now. That's the reason, if you've got a little longer term time horizon, you probably want to pick it up.
Yes, it's something to watch, certainly, pick up on the volatility. And that's what the banks told us this morning. Their trading desks, in particular Morgan Stanley, were the star of the reports this morning because they've been playing the volatility. And that is something we've got in spades right now. Rob, great to see you. Thank you so much for the commentary. I appreciate it.
Thanks, Cheryl.